In this video, we're going to talk about our trading edge. You hear this all the time. What kind of edge do you have with the strategy you use? Well, in this video, I'm going to share with you my opinion on our trading edge and how we win 2 times out of 3 possible outcomes. Hey, look, it's just hashtag facts. That's the way it is. Selling premium puts real money on our table. Hey, look, this is a stock talk video I did for my members, for which we take a single topic and we talk about it. No fluff, just trading edge discussion. I know you're gonna like this one. Hey, welcome back, everyone. Hey, look, this morning we're going to talk about the selling premium edge. What edge do we have when we sell premium? Write covered calls, sell cash, secure puts. I get this question many times. What is the advantages of selling premium over the buy and hold? Because time and time again, I'll buy a stock, I'll do a video about a trade I made, and then, of course, that video stays on YouTube for months and years. And depending when you watch the video, you know, the stock might be trading 5 times higher. A perfect example, and I get this all the time, is the NVIDIA trade, where I bought NVIDIA at where did I buy NVIDIA? About 100? Yeah, I think when I first got involved with the NVIDIA, it was 100. And of course now it's $550. And they'll tell me, look, you just held the stock. Well, the selling premium edge is all about making the steady, reliable 3 to 5% per month. Cash on cash. That's the edge. See, there's an edge that you can find edges in every investment strategy. The selling premium edge is simple. Of the 3 possible outcomes, we win 2 of them. Okay? So for example, we buy a stock, we write the out of the money strike, collect the premium, the stock goes above the strike, we have our shares taken away, win number 1. We made more money than we started with. And typically that's in 30 days. We do the 30-day trade. The second trade that could happen, we buy the stock, we write the out of the money covered call, and the stock trades sideways. We end up keeping our shares because it doesn't go above the strike price. So we keep the shares, but we keep that premium. And if the premium equaled some 2, 3, maybe 4%, depending on the stocks you're trading, there's your edge. We have an investment that has done nothing, but yet you've made anywhere from 2, 3, 4% just in the premium. And then, of course, the third outcome is we buy the stock, we write the out of the money covered call, the stock falls. We are holding a stock that is down below our stock purchase price, but we collect the premium. Again, we lose in that scenario only because if we were to sell the stock immediately, we're under our stock purchase price. But I don't see it as a loss. We're going to then write another covered call, and we're going to use all the various strategies based on where the stock is trading. So the edge is that there's 3 possible outcomes, 2 we win, and even the third, depending where you're at in the trade, meaning depending where you're at with your stock purchase, might not be considered a loss. It's just another opportunity to write another covered call. So what's important here is to understand our edges. Because when you have an investment strategy, like say for example, and I don't want to get too in the mud with this because there are a lot of option buyers that make money. Okay? I don't want to diss on the option buyer. Hey, that's your strategy. If you're making money buying options, hey, tip my hat to you. But most of the time, option buyers don't win. They find themselves in bad spots. Now, they have strategies too. They can get out of trades, But what I love about selling premium is that at the end of the day, they're paying us to take our shares or use our cash. We set the terms, right? The buyer, basically, they're settling for our terms. Now, you have to look at it that way. I mean, no, the buyer's buying on their terms. I get it. But my mindset is when I write the covered call, sell the cash secure put, it's on my terms. Now, with that said, I don't have a depreciating asset to zero. When you buy an option, you have a deadline. The edge goes to the seller. The option seller has the edge because the only expiration is, will the option buyer take your shares or not take your shares? See, the edge is to the selling premium investor. Now, there are strategies within the strategies where you can actually use selling premium and actually buying premium, right? You could straddle and do all kinds of things within the strategy. But what comes home for me is that I own the shares. So for me, I can dictate the terms. I can always sell premium. I'll give you an example. A perfect example is what I'm doing right now with my buy and hold stocks. Okay? The edge that a buy and hold investor has, if they're buying great dividend stocks, great S&P type company stocks, and companies that are increasing their profits, is that over the long term it goes higher. Global economics, right? We are in a global economy. They're going to grow their profits. At the end of the day, that's what Wall Street is all about. Profits. The more you get, the bigger your market cap. At the end of the day, earnings per share. Now, not always that simple. Companies like 3M, man, they are as big as they get with profits as big as you get. But if you don't have growth, you will muddle in the 150s and 200s forever, like it has been recently. But the buy and hold investor's edge is holding the shares, stock appreciation over the years, right? Not trying to time the market. It's time spent in the market, collecting dividends, right? If you're owning a 3% dividend paying stock, that's 3% you're going to make over 12 months without doing anything. And if you're investing in stocks that increase their dividends, you're getting a pay raise just holding their stock. Now that's an edge. The selling premium investor can capitalize on that with an edge of selling premium. See, I own Bristol Myers and Intel right now. Been holding them for years, 10 years right now. What I love to do, again, it's my edge of selling premium. I buy the stock, I'm going to hold it up or down. I'm holding it. I collect the 3% dividend. I'm holding it. Then, during the off 2 months, right? Golden rules of cover call writing. We want to avoid the month of earnings. So that leaves 2 months where there's no company events, earnings, ex-dividend date. The reason is volatility around those two particular events, minus any news. Well, if I can sell an additional 3% out of the money strike, maybe a 30 delta, I talk about this all the time, use that 30 delta. And here's your edge. And when the stock is moving higher, right? The stock's moving higher, you can sell that 30 delta higher. And the beautiful thing is, if you've been watching what I do, usually Wall Street will take these great stocks, they'll play them ups and downs. And if I'm going to write a covered call when they're at the up, it's more likely they're going to go down. Now, this is in the short term, but this is how it's played. So I write the covered call. I don't want to have my shares taken away. I mean, if I find myself in a spot, I'm going to have to manage the trade. But the point is, I write that 30 delta out of the money strike. And we're talking, I'll give you an example. The last one I wrote, Intel was trading at 67, man. It was popping. Microchips are absolutely in demand, and they are the king of microchips. Stock gets to 67. The 30 delta was 72. So I sell the 72.50. I get 50 cents for it. 52 cents. Now I know you're like, John, 52 cents is nothing. But look, Intel pays a 50-cent dividend. So again, I'm beating the buy and hold investor selling premium. That's our edge. Because where the buy and hold investor collected 4 dividends in a year, if using the double my dividend strategy I just explained, I could potentially collect 8. Now, I've collected 10 in a year because I'll play the stock and I'm not afraid to do it. I'm not afraid to have my shares taken away. But the edge is that we can sell premium. They pay us cash up front, and usually it can be 2, 3, 4% cash on cash every 30 days. There's your edge. We are making cash on cash 2, 3, 4%. And that's absurd, right? Because what we're trying to do, we're trying to beat the S&P 500. If your investment strategy, trading strategy can't beat the S&P 500, then you should have your money managed by somebody or get better. Get better at what you're doing. Because you could just put all your money in the SPY, an S&P 500 index, and you'll be knocking down. Right now, as this video is being taped, it's April 4th or 5th, the S&P for 2021 is up 8%. You don't have to do any heavy lifting. You'd be up 8% right now. Now, I'll leave you on this note. Well, then why wouldn't I put it in the S&P 500, John? Why wouldn't I just put my money in the SPY and just let it roll? Well, I'll tell you, 2 reasons. 2 reasons. One, a lot of those indexes, they might not pay the cash out monthly dividend or the 3-month dividend enough to really make it worth your while in retirement. See, selling premium, another edge, we can generate monthly cash money. It's a cash flow machine. It's like owning a rental property where your mortgage or your rental clears your mortgage, all expenses. What you're left with is cash positive, right? Every rental property owner wants to be cash positive. Well, selling premium, you're cash positive. Okay? Now, with that said, this year the S&P 500 is up 8%. Last year, I do think it was up 2020. I mean, it was beaten down hard. It was definitely up. But wasn't it but a couple years ago, the S&P was down 12%? I know it was because I keep track of all my numbers. So you're going to be on a roller coaster ride. Now, when you're in retirement, there's no edge there. See, when you're down 12%, mindset, you're not going on vacation. You know, you're seeing your net worth fall. Got to be diversified. But if we're selling premium with a portion of our selling premium portfolio, we can, if you get good at this, you could rely on a steady income stream. You don't have to be using NVIDIA or these riskier stocks. I just talked to you about Intel. You buy 500 shares, 1,000 shares, you do that monthly call, you get $1, $2 for a 30-day trade. I'm not saying a 30 delta, but right there, that's $2,000 if you have 1,000 shares. That is income on the table. That's your edge. So, with that said, and the other edge is we're making 2 to 3% cash on cash every single month. You do the math, just add it up. I have been able, with cash on cash since I started this, I think my very first year, I made 18% cash on cash. Actually, the very first year, I didn't really keep records. Could probably go back and determine that, but starting in 2017, I kept records. I think in 2017, I made 18.9%. 2018, I think I made, this off the top of my head, 21%, 22%. And then I went 24%. Right now as we speak, April 5th, 2021, cash on cash, I'm up 25.8% cash on cash. I could end the year right now, right? This is the money I started with on the table. This is where I'm at now. Minus out what I started, 25.8% is sitting right there. Now, taxes. I know you're going to say, John, well, what about taxes? Look, everybody has their own tax situation. We don't talk about taxes. Because see, I could have losses. I could write off losses against gains. You can too. Talk to your tax advisor. Okay? Yeah, most of the time we got the short-term capital gains and it's a kick in the ribs. But at the end of the day, and I hate to say this, I hate to hear this, but if you're paying taxes, it's a good thing. Hate it. That's why you gotta start a business. You gotta legitimately have write-offs. You gotta treat your trading like a business because you have the mindset of protecting your investments, and you always try to do your best. You're running a business mindset. Hey, if you're watching YouTube videos where people that are breaking down fake gurus and they criticize the whole mindset thing, I ain't speaking up for any fake guru. But when gurus talk about a mindset, it is a mindset. I'm going to tell you right now, I talk to people, thousands of people worldwide, they don't have the mindset. So when we talk today, 30 days later, they forgot we even talked. Okay? I start to get them involved. I try to coach them. They lose interest. No mindset. See, I have a mindset that I want to succeed in what I'm doing. I got many spinning plates, right? Mindset, man, positive mindset. We are going to have the mindset to be successful because one success turns into two, then three. We're getting our experience. We're being motivated and inspired, man. Nobody talks about failures. That's what I love. Treat your trading like a business, right? Have the positive mindset. We're not going to get in the fetal position if we find ourselves in a bad trade. We are going to stand up, know what we have to do. And because we're selling premium, we have another edge. Unless our shares are taken away, right? We're assigned the shares of somebody else. We have built-in patience of a trade. I'm going to leave you on this note. This is not talked about, but it's one of the first things I realized. Being a swing trader, day trader, I realized I had no patience, right? I get in a trade, man. I'm thinking, okay, I want to make that 3%. That's what they'll tell you. These fake gurus will tell you, look, we want to make 1% a day, 3% a day. We knock it down, we move on. Okay? That is unrealistic. They don't sell premium. They're trying to swing trade. Many times I would get in a trade. It wouldn't be about 2 days. I'm down 8%. No patience. Boom, I pulled a ripcord. I'm out. With selling premium, first thing I realized, for the most part, I'm in this baby for 30 days. Right? I sell somebody the right to take my shares. For the most part, I gotta wait 30 days. Now, granted, I could buy back all that stuff, but forget all that. That's managing a trade. On the face of it, I gotta wait 30 days. I can't even tell you how many times I've seen stocks trade in a 10-point window. And had I been day trading, swing trading, when that thing swings 10 points to the negative, I'd have bailed. Bailed like that. Then I come back, revisit the stock, and it's up 10 points from where I originally got involved. And I'm kicking myself, man, mentally. Like, damn, man, I don't know what I'm doing. Selling premium gives you that built-in patience, man. Because you'll sit there, you know you got the call on, you know you got to wait. You're going to wait 30 days, right? You want to see where it goes. And you're watching stocks go up and down. You're looking at the charts. Built-in patience. Then, along the way, you're building a mindset that this is how Wall Street trades. They run them up to sell them off to run them up again. Love saying that, and then immediately people hit the dislike button because they don't buy in to that. I'm going to tell you right now, I've been doing this over 5 years, selling premium for 5 years. I've been trading the stock market since 1997, okay? And I first got into the stock market back when I was in the Navy in 1987. But I did not realize until I started selling premium how stocks move in ranges, and it is bankable. I'm not going to sit here and tell you that fundamental trading is gone. That's an era of the 50s, 60s, 70s. What I'll tell you is this: today is dominated by technical trading. Fundamentals great because what's a golden rule? We have to own an S&P type company, great earnings, dividends, so on and so forth. That's all fundamentals. If you're not doing that side of the business, setting yourself up for failure. But today's market is about technical trading, computer trading, hitting support lines, hitting Keltner channel mids, selling at resistance if it does not break resistance. Hey, look, these are all algorithm trading. Algorithm trading isn't based on fundamentals, okay? Mindset. Understand it, roll with it. You can do this. Hey, look, I'm going to leave you right there. The selling premium edge is everything I just said. And I'm sure you can think of a couple more. That's why I do it. Primarily, it is my favorite investment strategy, and I'm getting better at it every single day. I learn something every single day, even though I've done literally thousands of trades. I could prove that when you count the ins and outs over the past 5 years, thousands of trades. And I'm winning more than I ever did. Hey, look, I'm not a guy that'll come up here and tell you I have a win rate of this, and this. I show you all my numbers in my upgraded CTP dashboard. They're all there. You look at a trade and you say, John, prove that trade. I can go to Fidelity and prove that trade. That gives me the confidence to keep doing what I'm doing. Hey, dance with who brung you. That's how I see it. And right now, that's what I'm doing. Hey, I'm going to leave it right there. Covered call edge. The cash secure put edge is selling premium. Be safe. Be healthy. Most important, be lucky. Until next time, may all your covered calls be profitable.